Hello and welcome to August 12th. Alpha's KR at 141%. And notice that the stochastic strategy is now a minus 5.5 and the SPY went to 19.4. Let's go look at that. There it is, 19.4, another high for the year to date. There it is, year to date, 19.4. And we're at minus 5.5. What is causing our situation with stochastics being so far behind is that we have two major trades that are really being anchors here. That is the YELP and AT&T. And the reason for those two is because those guys, we'll come back to KR in a minute here, but these two trades were done with no stops. They should have been stopped out a month and a half ago, which would then shore up the count a lot better. So the important lesson we're learning here is stops are important, but also too, we're benchmarking about the original date to expiration trade, and it comes down to one of the other conditions. A date to expiration trade is 9 months or more, or 6 months, 6 months minimum or more, because these are leaps. The idea is that the market will be up and you just set it, forget it, it'll come back in 6 months, 9 months, or a year when the option's ready to expire, and then you go on, look where you're at. In our kind of trading, it doesn't work for the 90 days. But this is a good benchmark to prove that DTE without stops is not conducive for short-term trading, and that the short terms are much better with the stops, which is what's happening up here. So with that said, let's go on to KR. And KR was 148% yesterday. We'll zoom in a little bit closer. Right up there, 148. We're 141 here at the close, down right there. So that's a 7%. That's a 7% drop, but it's still holding pretty good. And our stop is our tiers at third ratio. Now we were thinking about one of our exit clauses was taking profit at the 10th ratio, which is not far away. Look, the close today was 42.64, and we only need to make about $1.50, about $1.50 to $1.70, $1.70. You need about $1.70 to get to the 10th ratio. So the plan will be is to close above the 10, get some distance in the 10th ratio, above the 10th ratio, and then we'll move our stop here to either the 7th or 8th ratio exit. And remember, what the idea is to keep focus on the rules of engagement. Remember the rules of engagement, and they are: 1, protect capital. That's why we'll start off with initial stop here at a one risk ratio. And then as soon as price closes above that gantry, we move to the EPS. And then after that, then we'll go to when price clears above the first ratio reward, then we move it up, and then we stay here until we get price goes up here, up into the higher zone, 5 or even 6 ratio. This is what with DTE trading, you have to have that patience to follow it through. DTE trading is not for your short-term trader. Short-term traders who want to be out of the trade 2 and 3 weeks or even 2 or 3 days, it's not going to work. But the whole idea here is that we're out to, 1, prove stochastic strategies work, and number 2, that DTE can produce higher return. That's the ultimate point. Where your short-term trade might produce you 50 and 20% every few days or every few weeks, the whole idea here is to reach like 141% ROI. I mean, our ROI 100 traders would already been taking this money off the table. But we're not. We're going to October here with KR, PG KR, and then we have AT&T here at October also. That is approximately over 60 days away. All right, so that takes off the first leader. Let's go on to PG. And here at PG is at 91, and that's nice, and we can give it a little bit more push. And it looks like we have a nice uptrend on the EMA, and the first ratio is here, which is where we have our stop currently at. And the objective will be is to get about the 5th or 6th ratio. So I would have to expand the time frame to look at that and pass to get those parameters when the time comes. And the end result will be is to move the stop a little closer, but not so close that we don't infringe on the objective of the DTE trade. Okay, now it'd be kind of nice getting another 100 ROI in the column. Going on to RTX Raytheon, still moving along, little, just ever so slowly grinding up. Our entry was very wide, unfortunately, because of this long candle that came in here in the play. So therefore our first ratio is way up here at 890 something, almost blocking it. But that would be the objective there with 8 RTX. MACD, which is our MACDs, which is our put, is now ever getting so close to the first ratio. So we get stopped out. This is 8%. So if we get, and that 8% was the close was 236.67, and if we get hit at 237.30, which is approximately 60 cents away, then we would end up probably getting out maybe at break even or a slight profit. But the bottom line is that we get back our buying capital, and you notice our buying capital has dropped down because I have something to show at the end of today's presentation. Okay, so there's the surprise there. Okay, so that takes care of the positives. We did get stopped out. We already talked about YELP, but we'll do a separate video on TLRY, and RCL and XLV are in negative territory. We got stopped out at Visa. Go ahead and knock that out. And here is Visa. And Visa got stopped out at the first ratio. Now, remember that this Stochastic is only dealing with the indicators down below, disregarding the bias of the direction of the trade, which should not be ignored. A lot of the pro traders is look at your trend before getting into the trade and see if the trade matches your criteria of it's going in the right direction. So we got stopped out for $171 loss, and now the new O is 25.73. That said, now we'll go on to scanner time. Now in scanner time, to save you some time, we went through all the scanners and we came up with nothing really available except McDonald's. McDonald's is already in play, so that gave us T minus. So we'll go on and go to T minus, and I'll show you what we did in T minus. Now, before we leave here, I want you to see that my data is very in depth here. This takes a lot of time, and one of the big criteria in trading is you don't spend a lot of time. I spend a lot of time because I'm a data aficionado, but not you. So here's, I'm going to show you what we did over here at T minus. T minus is the one that came up for the day, and at T minus, we look at this, very clean and simple. The account, the instrument, what it owes, if you are going to be a loss leader trader. If not, no O. The date, the strategies, STO with 10 across the 10, closing above the EMA. Right there, the price is closing above the 10 EMA, and it's a DTE. We are going to go for a DTE trade on this. One contract, there we go. When I'll come to the trade, and there's a contract. And there, look here, this is where the contract is able to be fulfilled. Remember that 10% of capital, that makes it 530. 10% divided by 100 shares is 523. So we could not, we'd be take within a ballpark of 523 on the shares. Look, we got 475 with a 10-cent spread. That was a beautiful, absolutely well accepted option criteria. And it's a Delta 41, which is still also very good too. You can see here this would have been better, but we don't have that money in that budget, so therefore these options would not have been accepted. And now we come down. That's how the trade was selected, and we got into the trade. And we got into the trade. Our entry is at 145, and our exit is at 142.45. In fact, I need to do something here. Right here. After that, then we have entry price. Let's go ahead and put down the entry price here. 145. And there we are. So now we have real nice, good, nice, clean, easy data to read and to go with. And so with that, that is the conclusion of today's report for Alpha's KR at 141. And we'll now catch you in the next videos for TLRY. Thank you very much for stopping by.